Good morning and a warm welcome. Holly Shields here and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup. And in today's show, we'll be exploring the latest updates from the equity, currency and commodity markets from across the globe. The S&P 500 fell 0.47%, while the Dow Jones shed 0.24% and the Nasdaq Composite declined by 1.21%. The small cap Russell 2000 fell 1.13% as well. Companies like an industrial company, General Electric Co., aerospace, and defense company Raytheon Technologies, as well as shipping and logistic company United Parcel Service, reported their earnings during the market hours, while others like tech giants Apple, Microsoft, Alphabet, and 3M were scheduled to report after the market closes. Another tech giant, Amazon, is to present their report on July the 29th. Well, the US stocks have seen an upswing in recent days as positive corporate earnings lifted the traders' confidence. Investors also appear to have ignored the concerns over the threat of the Delta variant, inflation, and supply bottlenecks that could potentially erase the gains. The markets have been upbeat over the prospects of a faster economic recovery from COVID. Moving on to the next updates, orders for vehicles, appliances, and other durable goods rose in June, supporting the recovery. The utility segment provided the biggest boost to the S&P 500 index on Tuesday, while consumer discretionary and tech stocks withdrew. 5 of the 11 sectors on the ASX closed in green. Looking at other newsmakers now, and shipping and logistics company United Parcel Service, second quarter revenue rose by 14.5% to $23.42 billion. That being said, the UPS stock plunged over 7% on concerns that the present e-commerce boom may go away soon. Meanwhile, Chinese stocks continue to tumble amid threats from regulators. Tech companies like Baidu fell 3.56% and Alibaba dropped 4.85%. Jack Ma's Ant Group-backed telecommunications company Hello dropped plans for a US stock listing on fears of Chinese regulatory crackdown. People on the know have said. Tech company Intel Corp shares declined by 2.86% after it announced to expand its foundry to beef up chip production. The company hopes to have enough supplies by the year 2025. And EV car maker Tesla stock shed over 2% on global chip supply concerns, a day after it reported a 98% revenue growth to $11.96 billion in the second quarter. Now let's take a look at the futures and commodities market in the US. Gold futures were down 0.02% and silver decreased by 2.36%, while copper fell 0.55% as well. Also on the downturn, Brent oil decreased by 0.11% and WTI crude traded flat. Onto the US bond market now, and the 30-year Treasury bond yields were down 1.66%, while the 10-year bond yields decreased 2.87%. The US dollar futures index decreased as well by 0.17%. And this was the latest from the US markets. Now it's time for a short break, but quickly stay with us and I'll be back to look at the Europe and UK markets.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Welcome back, I'm Holly and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup. Let's now start with the Europe and UK markets. European stocks lost ground on Tuesday after falls in Chinese shares and Reckitt Benckiser's warning on margins ahead of earnings updates from big fashion retailers in the day. The pan-European STOXX 600 index finished 0.54% lower, and MSCI's gauge of stocks across the globe shed 0.81%. Government bond yields, on the other hand, across the euro area fell on Tuesday, with German bond yields holding close to 5 to 1.5 month lows, hitting the previous session, while real bond yields slipped to fresh lows. And weak equity markets undermined by a third straight session of selling in the Chinese internet giants supported demand for safe haven bonds. But overall activity was generally subdued ahead of a two-day US Federal Reserve meeting starting later. And now, moving on to the UK, the London markets traded in a red zone due to weak performance of the mining stocks. According to the Confederation of British Industry, UK retail sales had witnessed a marginal drop in July of 2021. FTSE 100 lifted consumer goods company Reckitt Benckiser Group, whose shares plunged by about 8.32% after the company reported a net loss during the first half as it wrote down the value of infant formula and China nutrition assets. And next, internet-based retail company Moonpig Group shares dropped by around 10.12% after the company had warned regarding a drop in sales as COVID-19 restrictions got relaxed. Nevertheless, the company has reported a significant jump in revenue and profitability during the financial year 2021. And international business-to-business media business Accenture had raised around £153 million to strengthen the balance sheet. Furthermore, the shares went down by around 6.29%. Well, this is how the Europe and UK markets performed. It's time for another short break, but after the break, we'll take a look at the Asian and Australian stock markets. So stay tuned to Kalkine TV. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter
Be on top of the latest news and announcements.
with Kalkine TV. Welcome back, I'm Holly and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup. Let's now have a look at Asia and Australian stock markets performance. First up, looking at some of the Asian market performance, starting with the Japan market. Japanese equities rose on Tuesday, tracking overnight gains on Wall Street as investors cheered upbeat corporate earnings. But the benchmark Nikkei 225 failed to close above the key psychological level for a second straight session. The broader topics climbed 0.64%. And moving on now to the Hong Kong market, Hong Kong's benchmark index and Chinese A shares extended sharp losses to end a multi-month closing low on Tuesday, as investors worried over the impact of tighter government regulations. In the equity markets now, Hong Kong's benchmark Hang Seng index fell 4.22% to its lowest close since November, bringing its losses since Thursday to more than 9.5%. The Hang Seng China Enterprises Index closed 5.08% lower. And moving on from Hong Kong now to the South Korean market. South Korean shares ended higher on Tuesday, lifted by solid domestic economic data and overnight gains on Wall Street ahead of major tech companies' earnings and the Federal Reserve's policy meeting. Both the won and the benchmark bond yield rose. The Kospi closed up 0.24%, rebounding from a 0.91% decline on Monday. And now let's finally explore the shares back home. The Australian share market is under pressure today following a weak night of trading on Wall Street. On Tuesday, the benchmark closed 0.5% higher at 7,431.4 points. Stocks of major energy companies like Santos and Woodside Petroleum could be trading lower on Wednesday. The leading gold mining stocks, including Northern Star Resources, as well as Newcrest Mining, could trade higher today as well. Alright then, that is just about all for now, but stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, economy and diverse themes and sectors. Holly Shields signing off.